Welcome to the South Florida M&A Advisors podcast, your trusted M&A team. Here's your host, Russell Cohen.
Hello, everyone. Welcome back to another episode of the South Florida M&A Advisors podcast. I'm your co-host, Jeremy Wolf, joined by none other than your host, the man, the myth, the legend. We have Russell Cohen in the house. How you doing, my man?
Hey, doing great.
So good to see you. It's been a while since we did one of these. So
yeah.
Nice to be back in the seat here, talking to you, learning about what you're doing in and around our great community. And I know you have some exciting news to share on the horizon. You just assisted a business with a deal for $100 million, which is fantastic news. So congratulations on that.
Thank you. That was the largest sale, for myself and the company. And myself and Sunil Shenoy were co-listers, and we were able to go through 11 months of an M&A transaction and get to the finish line, no doubt.
Well, again, congratulations on that. May it be the first of many more to come. I know you had been trying to, take the business to that next level and start working on some of these larger deals in the M&A space. And clearly you're on the path to that place now. So congrats on that, brother.
Yes. Yeah. And that's the goal. And that's why I formed South Florida M&A, to service South Florida business owners with, great service, boutique M&A service. And that's what we're trying to achieve here. So a great start, and I might be the largest sale I ever do, but, I'm okay with that. And, but now we're poised for more successes in 24 and 25.
Wonderful. So let's get into it. Why don't you tell us a little bit about the deal, I guess, kind of frame it, and then we'll get into some of the challenges that you had to overcome. Because as we know, these processes, it's a long time to build up to a transaction like this. I think you mentioned it was like 11 months in the making, right?
Yeah, very complicated sale. So the company that sold was Campany Roofing out of West Palm Beach. The business was sold for $100 million. Final down payment, $80 million, with 10% rollover equity and a 10% earnout. So there were many complications. There were many issues along the way that we were able to overcome. It died like 10, 12 times. But we were, somehow, some way, the business was extremely strong, a great owner, great business, great management team. Everything came together at the end. And we were, on pins and needles all the way through the deal, right? No doubt.
Yeah, it sounds like it. So is that, I'd imagine that for a transaction that large, the time frame on that is extended past a smaller transaction. Is it common in those cases for deals to kind of die off and then come back that many times, 10 or 11 times, or is that more uncommon?
In general, when you're selling a business, it is someone's largest asset, typically on their balance sheet. So a very emotional ride. Obviously, you don't expect to have issues. There's going to be issues. In this particular case, this did take longer than we thought, because we were dealing with the buyers. The private equity group was trying to get equity investors and debt lenders. And there were specific challenges in raising funds for this particular transaction. So that's kind of one of the major points that basically started with an LOI in February and closed at the end of November. So yeah, that was one of the many challenges in the journey to the closing, I would call.
Can you dig into that a little bit deeper to talk about how you overcame the financing challenges through the process?
So this particular buyer was a startup private equity. They were a company called Broadwing Capital, and now they're officially a private equity group because they did their first platform acquisition in the roofing industry. So basically what was going on, this was a couple of gentlemen started this private equity group, had a great pedigree in the private equity space. So they started Broadwing Capital. So they had to go out to the open market and raise funds and get those equity investors. So outside of trying to find $70 to $80 million for this particular, kickoff, platform deal, they were raising funds for future add-ons and future platforms. So, while they were talking to equity investors and debt lenders, we were also, you were seeing the interest rates rise. The Fed has been raising rates. Everyone's interest rates are on everything that affects life has been going up. So, capital raising gets challenging. So we start this deal in February, and we're going through the quality of earnings, which is kind of the colonoscopy of the M&A deal, basically going through all the accounting and many different levels of diligence. And, we get, we get through it, which is great. A very complicated process, as I said before. And what happened was the seller's CFO resigned in July. He had an eye disease. He was overwhelmed with the process, and he was, had to make a decision because, he had health complications. So in the middle of our, of our deal, we lose the seller's CFO, and we had to bring in a fractional CFO to take over the entire accounting department of this roofing company. So we were basically chasing our tails on the financials. The Broadwing Capital was trying to raise a lot of money based on a hockey stick growth from 21 to 22. And the 23 numbers, they were talking to equity investors with first quarter numbers, which is like a no-no, basically. So it got very difficult to get the 630 profit and loss, because when they're raising money, they want to see how the business is doing in the current year. So we're sitting in the summertime, and they're trying to raise money, and they only have the first quarter numbers. And so by the time we finally got the 630 numbers, we were deep into August, heading into September. And so that became the challenge, that we were chasing our tail on the numbers. Even though we were moving along in the quality of earnings, the buyers had to go through 200 investors to finally land at a few.
Wow.
And so now we're sitting, we're sitting on edge the entire way. So basically we're now sitting in September, and the equity investors and debt lenders are coming into town, interviewing the seller. We're going for meals. They're seeing projects. We're going on job sites. And this is going on pretty consistently throughout the months of September. And then so we think we're going to get to the finish line, and they're telling us they're going to pick a particular equity investor, and they give us a support letter saying that they have the money. And then they said, wait a minute, we have someone else. So another group came down, and once again touring them around lunches, dinners, and meetings. And by the mid-October, they got the support letter from Treeline Capital, which funded the initial upfront money for the private equity group, and they secured their debt lenders. So we're talking about mid to late October, and we've been running this deal since February. And we at the end of that time frame, we were like, oh my God, we got the funding, and now we're on a race to close. But while all this was going on, the seller's EBITDA, the earnings of the company, was growing from $13 to $20 million. So in 22, he made 13, and he was like tracking to over $20 million. So now you start thinking seller's going to reprice the deal, because now he can get 100, he can get 120, 140 million. So we're like, okay, is he going to pull the plug on the deal and try to go back to market?
So many moving parts there. It's no surprise how the deal almost fell apart nearly a dozen times. A lot of things need to go right for a deal like that to materialize, for sure.
Yes, a lot of stars have to align. Yeah. And at the end of the day, the seller was happy with the price. He did not want to go through the process again of re-interviewing buyers. There was so much money spent on attorneys, the CFO, all the advisors that were involved from two M&A advisors, Sunil and myself, and his benefits advisor, his insurance advisor, the two attorneys on the transaction. So it was incredible amounts of calls and meetings, and it got done November 30th, but we really weren't skiing downhill, as I say, until we knew that we got the funding. That's what caused the deal to go longer than we thought. But at the end of the day, we're sitting here on February 8th, and we're looking back, and you look back at what went wrong, and you want to improve upon the process, and be better for the next deal. And we
absolutely.
We all went into the LOI thinking, this would not be as challenging. We all went feeling everyone was in love with each other, and deal fatigue gets involved in any transaction. It could be a small business and a large business, and that's where you run the risk of the seller just calling the deal off.
Well, congratulations again on this deal. May you have many, many more to come in the future and in the years to come. And was there anything else you wanted to share before we wrap up here?
Yeah. So love the opportunity. Whoever who actually clicks on the podcast, it's very important that you prepare your business for sale. If I can meet with a business owner in advance, I can give them the proper tips how to be private equity ready, because you don't know what you don't know. And you might think your books are perfect, but I could promise you there are things that you probably never thought of that will happen in transactions. So we really got to get in early, get the right team together, get the books in order, make recommendations, so you don't have to go through craziness in the transaction.
100%. Yeah. I'm learning a lot through this process, and it's definitely important to have a professional such as yourself on your side through this process, because it is wildly complicated for sure. All right, everyone.
That's only a few of that was only one issue, so we could probably do, 5 or 6 podcasts on the challenges on the final sale of this company. So, but this one was a good start.
Good starting point. All right, everyone, thanks for tuning in, and we will catch you all next time. Everyone, take care. Have a wonderful day.
Thanks for listening to the South Florida M&A Advisors podcast. For more information, visit southfloridama.com or contact 954-646-7651.